Okay, today is February 2nd, 2013. Let's take a look at some of the stock here. The first one is Microsoft, and looking at Microsoft here, it's been kind of been trading within this trading band here, and recently it's trying to break out of this level somewhere around the 27.75, and it kind of bumped up to this resistant area at the 28.20 or 28.25 area there. So right now it seems like it's trying to make another run at it at this level here, and certainly if it could break through this 28.25, then there's a good possibility that it might be able to swing back up here somewhere around this 30 to 50 area. So because there is some resistance here previously when it get to this level, and also especially this this candle here, this doji type of candle, and definitely looking at this major move, we could get this at least up to the 29.50, I believe. That's the mark here. Yeah, somewhere around this 29.20. So just kind of wait and watch for this to break out. If it could hold above this the high of this candle, then maybe play to break through this 2025 and possibly get a swing trade up to the 30 area. So that would be the way I would play Microsoft. Also notice that the MACD is kind of giving you some slight positive divergence here, which is a good sign. And the next one that I want to talk about is Facebook. Facebook came out on earning last week on after the close on Wednesday, and then Thursday it recovered and recaptured most of the losses that it occurred during after-hour trading after the earning came out, and it's only closed it slightly down. Then on Friday, after the Thursday big strong run coming back, Fridays there seems to be kind of a lot of pressure holding it down at the $30 area, and that could be possibly due to the weekly option expiration. But definitely I still holding my long position. I'm looking at this support area here, between this this 29 and I believe it's 29.40 and the 28.25 area. So these two support area, I'm kind of monitoring that, and if it break these support, especially breaking below this 28.25 area, then I probably will take my position out, close it out, and I just wait for the next setup. I do believe, looking at the price action, the trend is for the price to go higher, and I wouldn't be surprised to see this stock come back up to this 36 and possibly hitting that 38 in the near future. It's just that I'm a trader, and I don't want to tie up my capital and watch it come down here and then wait for a retracement back up. I would rather take my money out if it break these support and go trade another stock, and when I see another setup for a trade, then I will re-enter. So but definitely it's a different trading plan for different folks, so this all depends what your trading plans are, but these are the two support level that I believe should be closely watched, especially the 28.25. If it break that, it could easily come back down to this this area here. It could be the 26 area and possibly this 24 area. So that's the reason why if it break this 28.25, I will most likely definitely want to close my position out. And the other one is Google. We've been talking about Google breaking that 760, and on Friday it broke that 760 and hit an all-time high. So right now we're looking at Google. It's tough to gauge to see how high it go, but definitely the momentum is there for it to go higher. But of course you also see that there is 4 consecutive update, and so that's kind of a little bit extended, and you probably could see maybe 1 or 2 pullback day, and since there is no higher level for us to get a gauge of where the resistance might be or where it might potentially encounter resistance, then what I normally do is use the Fibonacci retracement level to get some idea where that resistance might be. So if it break about the 775, this 100% retracement on the Fibonacci, then I'm looking for an extension to be that 127, and that would be somewhere around that 834, 835 level. But of course, if it come back down, and let's say before it break this and move this up to this 835, there might be a little bit pullback. Then I'll probably expect it to see somewhere around here. Let me zoom this out. Somewhere around this area here, this 745, 747 area, and maybe possibly get down to this earning gap, the low of this earning gap, and see could it hold this gap. And if it can't, then there could be a possibility of retracing back and fill this gap, and that would bring this thing down to that retracement of 618. That's the well, essentially it's a 38.2% retracement. So so those are some of the levels that I would be watching on Google. I'm not in Google right now, so definitely for those that you are holding long, these are the levels that I would keep an eye on. This this 760, it might be present a little bit support, but I doubt it. I think it's most likely it will come down. If it's going to pull back, it probably will pull back to this 735 area, and maybe a little bit of a support here at this 747, 748. So the other one to look at is Goldman Sachs. We talked about Goldman Sachs, we're at 130, breaking that 130, and that was this long trend line here at this point here, give us this level. And then we also was thinking about this particular band here and the retracement, the major move up to about the 170, 172. Then you also look at the if we take a look at the Fibonacci retracement using these pivot here, this level here, let's say this 130 and this particular low over here as a pivot, then it's getting close to that 161 extension, which is somewhere around this 152. So it could be pulling back to this 140, because it is kind of a little extended as well, and also you got a little bit of a minor negative divergence on the MACD. And again, 4 consecutive update, and it's been a heck of a run. So should use your exercise your 12 stop to protect your profit. It could be coming back down to somewhere around here. There might be a little bit support area here, okay, but it could run up to this 152, 153 before it might pull back. So anything is possible. I do believe that that 170 still put it is a good target. That 170, 175. Essentially is trying to get back up to this area here. Okay, so good luck to all you trading next week, and enjoy the game tomorrow.